created Stripe to tackle this problem. With Stripe, they revolutionized online payments globally and crucially enabled hundreds of thousands of startups to sell online using their developer-friendly platform. And according to John, they're just getting started. Stripe's most recent valuation was for $9 billion, and John is reportedly the world's youngest self-made billionaire. He's also a qualified pilot and pianist. Hosting this afternoon's Fireside Chat is Thorold Barker, EMEA Editor for the Wall Street Journal. But you'll also have your own opportunity to ask questions via Slido. The information is behind me. So would you all please raise to your feet and give it up for John Collison.
Okay. Awesome. Whoa. Good afternoon, everybody. John, welcome. I just wanted to kick off. It's been a great introduction to the great achievements you've had already. But I wanted to kick off by giving you a chance to really explain what Stripe is. I was having breakfast this morning with the CEO of PayPal and one of the founders of Square and one of the executives from Western Union, all big payments companies. And one of the things that was very clear to me is that this is a highly complex industry and one where you may be competing with a company on one side, cooperating on another. Can you just tell us what is Stripe's reason for existence? How has it succeeded? And a little bit how it fits into that ecosystem in terms of who it competes with, who it plays with, etc.
Yeah, so this was actually something we ran into when we started Stripe and when we were explaining it or recruiting for it or raising money for it, in that it was both the case that the space felt really crowded. I mean, you have the PayPals and Squares and everything of the world, and at the same time, this specific problem was completely unaddressed. And so the specific problem Stripe solves is if you are starting an internet business tomorrow, before Stripe, there was no good way for you to accept money from your customers. And I mean, that sounds kind of strange on the face of it because we've had this internet thing for a long time. You'd think this problem would have been solved. But one, just accepting money from people globally was really hard. And so as you look at your potential customers all around the world, not just in the UK, not just in Europe, but across all the continents, just reaching them was pretty difficult. And then maybe more relevantly, accepting money is kind of the easy part in a way. If you are running one of these new internet businesses, maybe it's a subscription company, or maybe you're running a digital marketplace or something like this, there are all these other tasks you have to attend to, building billing infrastructure, preventing fraud, securely storing credit card data, handling compliance, and you're kind of left on your own, if you're using PayPal or something like that, to deal with the rest of the stuff. And so we envisaged Stripe as an infrastructure platform for internet businesses to accept money from their customers.
And so would Apple or Google or Amazon or MasterCard and Visa, for example, be competitors of yours, or are those people you work with and use their platforms to do yours?
So all those folks are actually fairly complementary. One of the biggest changes we've seen in the payments world over the past few years has been the emergence of things like Apple Pay and Android Pay. And that, again, if you're a Stripe and you're looking to serve more online businesses and have them succeed, the way we talk about it internally is increasing the GDP of the internet. That's our rubric for how can we actually help there be more business happening online. And if you want to do that, the biggest issue you run into is actually buying things is archaic, right? In that the experience of pecking in your phone number or your credit card number on a mobile with your thumbs is pretty painful. And the fact that, I mean, with the Wall Street Journal, it is much easier for me to buy a physical copy of the Wall Street Journal than it is for me to access it online behind the paywall. And that's crazy when you think, it's 2017. You think we would have figured this stuff out by now, but we haven't. And so one of the biggest things for our customers has been the fact that you go from everyone having to type in a whole bunch of data entry to buy stuff to just being able to use Apple Pay or Android Pay. It's a significant and growing payment method for us. So it used to just be pure credit cards. Now we were a launch partner for Apple Pay. We work closely with Google on Android Pay, and we see stories like Indiegogo, the big crowdfunding site. They saw a doubling of conversions when they rolled out Apple Pay. And so we're excited about, one, the first order of effects, and we think businesses will be more successful as you get modernization like this. And two, I think there'll be a bunch of new kinds of business that are possible as a result of this. And so, the Wall Street Journal has not traditionally sold individual issues online because it's such a pain in the neck to actually buy things. This is the kind of thing that could be possible now that you're starting to make things easier.
Interesting. So we'll go back to the future in a second, but just take us back a little bit on your story of what happened. So you moved out to San Francisco, set this up. What was the sort of breakthrough moment you had when this really started to get traction and take off? What caused that?
Yeah, so we started working on Stripe in 2009, and it was very much one of these stories. I think a lot of people happen upon entrepreneurial opportunities when you find something slightly broken in the world. And I think there's two potential responses to finding something off or illogical about the world. One is you just kind of deal with it and move on. And the other is you stop and pause for a second. You're like, is there a good reason that things are that way? And I think, Stripe is very much not the only example of this. A lot of folks here probably use Slack. I love Slack, and I remember pitching people on developing something like Slack in 2011, 2012, because group chat was such a pain in the neck. And Stripe was very much similar. Anyone who had dealt with accepting money online would happily talk your ear off about what a pain in the neck it had been, and yet it felt like no one was doing anything about it. Yeah. So we started developing the first version of it. And the interesting thing, when you say, was there a breakthrough moment, Stripe has always grown. Now we've had customers for 6.5 years on Stripe. There was never, the South by Southwest moment when, the chart just went vertical. It has been 6.5 years of very steady exponential growth, or 7, yeah. And that is kind of how it's emerged, because, these things, they take a while to actually ramp up.
And how embedded are people? Once they join you, do they leave, or are people pretty locked in once they've taken your...
People, by and large, stay with Stripe, and not because they can't move elsewhere. They obviously can, but for two reasons. I mean, one, we internally, the teams at Stripe put a huge amount of effort into making sure the product works well. Regardless of if you are a small startup starting out, or now we have the UK government uses Stripe for the Scottish Land Registry. If any of you are Scottish landlords, or the ASOSs or Facebooks and Salesforces of the world. So at the high end, it also very much works. And the other part, again, is if you were to not use Stripe, you'd probably have to devote internal engineering teams to replicating the functionality offered by Stripe. And for nearly all tech companies these days, they realize that they are constrained largely on engineering resources. That is the bottleneck. And so do you want your engineers working on the product, or do you want them working on internal engineering infrastructure? It's generally not a debate.
Interesting. And we're sitting here in London. You decided to do this in San Francisco. Given your experience, could you have achieved this in London, or was being in Silicon Valley or San Francisco an important part of this success?
There's probably two forms of that question. Could we have built it in London then and built it in London now?
Okay, well, let's answer both of those.
Yeah, so...
Let's start with, could you have done it then, and then how much has changed?
I think then it would have been quite challenging, and here's why. In my experience, when people talk about startup ecosystems and kind of fostering entrepreneurship, there tends to be a slightly misplaced focus on capital, and talking about the number of investors and the amounts raised and stuff like that. And I think it's misplaced for two reasons. One, because it's increasingly cheaper to start internet businesses, and so the availability of capital becomes less relevant as you do that. And honestly, I think all the focus ends up on capital because it's easy to measure. It's just there, and you can add numbers together.
See evaluation.
You can quantify it exactly. For us, the big thing that ended up being massively influential as we built out Stripe was, Stripe was 2 people 7 years ago, and we were doing everything from writing code to talking to customers to setting what the product should be. Stripe is now 750 people. Silicon Valley has an enormous pool of people who are both highly skilled and highly experienced. The guy who runs engineering at Stripe has been in the industry for 30 years. He worked on SSL at Netscape when SSL was being developed. You get all this accumulated experience that you can bring to bear on the problem. And the fact that people aren't too conservative. They're actually pretty risk tolerant. I remember when we were hiring our first COO as our 8th employee, and it was this, company, it wasn't clear what the future would be. He had a very established track record, and he was totally willing to take the jump, and it might have worked out, it might have not. And that is the thing that I think that other places are starting to catch up on. Now there's obviously a very, between DeepMind and Google and Facebook and all the, significant engineering presences in London, places are starting to catch up on the depth of the talent pool, and they're starting to catch up on the risk tolerance, but no one is at Silicon Valley levels yet.
So the answer to the question is it would have been difficult then, but is more possible now, you think?
That's right. And I think you see this in the data now, where the number of significant tech companies that are being created is kind of up and to the right.
And how much difference does it make here in the UK not having a massive US market as your domestic market? Is that a big problem, or is that something that companies here can actually overcome pretty easily now?
Well, this is getting dangerously close to the question of the month on Brexit, but
you can answer that at the same time. Why not?
Well, but traditionally, I mean, what I notice with a lot of European companies is that they start out serving the European market, and they don't necessarily limit themselves to the domestic market. But do you know where the biggest concentration of startups is by number of entrepreneurs or capital?
I'm going to be asking the questions, but...
Oh, okay, sorry.
No, the answer is I have no idea. Tell me.
It's Israel. And okay. Israel obviously is a very small domestic market, but they're a huge exporter of technology, and they make very successful global companies. I mean, if you took directions driving here, it's probably powered by Waze, which is an Israeli company, now integrated into Google Maps, but still based in Israel. And so I think the size of the domestic market is not necessarily a limitation.
Okay, and you raised Brexit. Is that going to have a big impact, do you think, from where you sit?
Long term, I think all the trends that Stripe is a part of, and Stripe is betting on, globalization, more commerce moving onto the internet, more openness, those trends will continue long term. And we're not worried about that, despite maybe some short-term retrenchment and inward-lookingness in the UK, in the US as well, obviously. But in the short term, as we looked at, we have an office in London, as we think about hiring in the UK, I mean, you spend a year complaining about immigrants, and unsurprisingly, people both want to move to the UK less, and it's less obvious, how we will be able to hire and kind of make London a talent hub. So that definitely is a real factor for us when it comes to hiring.
We'll go into a little bit more on the future of payments in a second, but just one question I'm interested in. What's it like setting up a company with your brother? How does that work? Are you guys still friends? Does it work out well? I mean, how does that incredible proximity play out over this sort of intensity in this sort of period?
Yeah, my standard go-to joke is that we got all the fights out of the way when we were 3 and 5, so we've got it's kind of smooth sailing from there. But I mean, there is actually a little bit of truth in that, as anyone here who's done it knows, starting a startup is really hard and stressful and very all-consuming. And so if you are simultaneously trying to learn how to work effectively with someone while doing a startup, that's a tall order. And you can do it, and lots of people have done it, to be clear. But it's just a lot at once. And so having someone where, Patrick and I not only, we're brothers, but had started a business before and everything, having someone who you can work well with, that's pretty valuable.
Okay. Going forward, what are the biggest things? I mean, you've obviously carved out this position so far. What are the biggest things that still need to be solved in this industry? Is it fraud? Is it speed of transaction? Is it people's identities, the cost of transactions? What is the big thing that you're focused on?
I would say there are 2 major things that we're very focused on. One is our international coverage is still a journey, and it is still mind-boggling to me that you have whatever number you ascribe to it, maybe 3-4 billion people connected to the internet as users there, and yet the economic grid is lagging very far behind. And so we launched a partnership with Alipay a while back to let people reach Chinese consumers. We have other payment methods in the works, but just we're not there, and that is something that we invest a lot of time in, because it should be the case that as you set up an internet business, you can address this global audience, and that is not yet the case. The second thing is we are...
But just on that, are you seeing signs of a simplification of payments beginning to make it much more possible to open companies in less obvious places? Are you beginning to see real signs of people doing that?
We both see people starting companies in far-flung places, and we see smaller companies going global quicker. So we have this company, Chuffed, which is an Australian platform for nonprofits. And they were going international and opening in all these countries when they were 2 people, which is just something that would not have been possible 10 years ago. So that's one.
There's a second point.
The second thing is there's this growing trend of the platform economy and people building marketplace businesses on Stripe. So I feel like Internet 1.0 was you build a full stack business yourself and you own every part of it. This is the pets.com, and you have your warehouses full of pet food and everything like that. As you look at the successful companies that are growing now, it is often, someone like Deliveroo connecting supply and demand in a whole bunch of markets where they operate. And we are very along this trend, and we see a huge number of companies doing it. And it's everyone from, obviously, new startups starting out. And, it's the big companies like the Deliveroos and Lyft and Grab Taxi and Uber that tend to get the headlines. But, there are many companies doing a marketplace for construction equipment rental on Stripe. And you kind of don't tend to think about that, but it's like a really significant need that the internet can make much better. There's much more liquidity, there's much more better trust and safety, reputation, things like that. And so, often the ones getting the headlines are at the head, but there's a long number of them. And we even see large corporates getting into this as a way for them to not get disrupted by all the startups that come nibbling along. Because I think, the companies, the startups that are here tend to look at the large companies and say, maybe we'll be like them someday. The funny thing is, when we go talk to large companies, they're looking at all the small startups and they see, they're not, hotels see Airbnb coming along and they're like, wow, we need to figure out what our strategy is here. And so you have folks like, Daimler building a ride-sharing service on Stripe. We thought that was really cool. You have ASOS building ASOS Marketplace, which is their answer to kind of the faster-moving fashion trends and letting things get set up and running quicker. And so you have marketplaces both being set up at the startup level, but also at the larger corporate level.
And when you look out, let's say 10 years from this point, how simple can payments actually get? I mean, you still charge a couple of percent for each transaction, something like that?
In the UK, it's 1.4%.
1.4, sorry, so a bit less than that. But still a decent amount of money for each transaction coming through. I mean, at what point are we going to have a much more simple system where you don't have banks doing this and credit cards doing this and people taking a cut of each part of this framework?
Well, I think any time, fundamentally, if it costs money to move money, there'll be some charge to do it. That should be kind of commensurate with the value delivered. Where we would like to see things go is, that guy I mentioned, Billy, who we hired early on as our COO, he had worked in many startups, before Stripe, and he had described the horror stories of, back in the day, if you're launching a service and you're going to have a big splashy news launch, you're there 6 months in advance ordering servers and, racking them and figuring out capacity planning, what are we actually going to need, things like this. And the cloud really did change that, where Stripe runs on Amazon Web Services, and there's this whole function that we don't need to contemplate as a result of that being provided as infrastructure on tap. We're not there yet, but we see that as very much where the business world should go, where I shouldn't need to think that much about the, tax or, currency or whatever implications of running this global business. So we want to more and more automate a bunch of the back office and give people time back. And there is still plenty, we have a to-do list as long as your arm in terms of things we need to do to get there. But ideally, businesses could just focus on the differential value they're providing, on what they are good at, and we can kind of handle the rest.
We're going to go to questions in a minute. So if you haven't asked your question on Slido, please do. I'll go to them in a second. And if you could put them on the screen, somebody, that would be fantastic as well. How does blockchain or some of the currencies, the cryptocurrencies, play into this? I mean, are they going to be this very seamless way of transferring money that becomes mainstream in the future? Or are there going to be too many barriers to that happening? How do you see them fitting into the whole?
Yeah, so I don't know, it feels like every time, the price of Bitcoin and Ethereum is going, up and to the right now, and, the amount of attention paid to them tends to follow the price curve.
Which is an amazing price curve.
It's a crazy price curve, yeah, no, it really is. Kind of fascinating to watch. I don't own any Bitcoins or anything, and so I'm just
you haven't been tempted to...
No, I'm an idle observer, but it seems like a slightly dangerous speculation game. But
By the way, this is someone who knows their stuff on payments, so you should listen to that. Keep going.
We think the technologies behind distributed consensus protocols and distributed ledgers are very interesting and probably will be a more significant part of the financial world going future than they have been historically, because getting this stuff right, traditionally you did it very cumbersome, clearing transactions in the US is super slow, partly as a result of this. You send someone a bank transfer, it takes 3 days to arrive. It's kind of shocking. And so I think we will see more of that. Whether it'll be specifically Bitcoin or specifically the Bitcoin blockchain, because the cryptocurrency nerds here, you can get into like the technical details of the protocol, and they run into scaling issues and stuff like that. I'm somewhat skeptical of that, and I'm somewhat skeptical of Bitcoin as a raw payment method, if for no other reason than you have all the Forex stuff of, if you want to pay $20, the amount you have to pay in Bitcoin kind of keeps changing. But distributed ledgers, sure, absolutely.
And just, I'm going to go to questions, but just finally quickly on fraud, obviously a big issue with payments all the time. Is that something that, in your experience, is getting worse, getting better? What's the trajectory of that?
It's gradually getting better. We started from a place where it really was the Wild West. Credit card security is ridiculous when you think about it, in that you have you're giving your credit card number, and the way it's historically worked is, now your credit card number is sitting with all these businesses that are not in the cybersecurity business and shouldn't have to be in the cybersecurity business. So that's kind of one of the things that we end up selling on, is the fact that Stripe handles all the credit card data. We're good at securely storing it, so you don't have to. And it's the general way of the world. Apple Pay and Android Pay, people tend to talk about the stuff that's very visible, like, oh, you can pay with your thumbprint and stuff like that. But the fact that the business never has to or never can see your financial data, that's a big deal. And that's a huge step forward on the security angle. So I think it's getting better. It needs to get better still, but we'll get there.
Let's go to a few questions. So what was the toughest moment of your journey? Were there any big decisions that you felt like you have no idea what's going to happen? So this is obviously someone who's in the throes of making those decisions. What do you say to that?
Well, one thing that was interesting is Stripe kind of took forever to work, in that, we're here 7.5 years in, and in the early stages, you have these signs of life and it's growing, but, zoomed out, certainly in the chart now, you have these kind of tiny trickles of stuff coming in. And so part of what's hard is just, for some kinds of infrastructural problems like this, it takes an incredibly long time for the investments to actually pay off. People often ask us about kind of raising money and our strategies and things like that. We kind of had no choice, in that when you're working on something like Stripe, you do all this work in the early stages that pays off, 5, 10, 15 years in the future. That was one of the harder things. Obviously nothing catastrophic happened, or we wouldn't be sitting here talking.
Was there any particular learning, the question's gone, but was there any particular learning moment that you had, or not? Not really. It sounds like it all went, you said, there was no big inflection point.
I'm smoothing out the curve a little bit. It was a little
was there any moment to this question? Was there any tough moment where you really had to dig in and make a tough call, or learn something that was particularly profound that you can share?
I would say the hardest things tend to be, and anyone who's had to deal with it in the audience can probably relate, the hardest things are probably people-related. Yep. So, Stripe is not, all the kind of press tends to focus on the founders, but Stripe is a group of 750 people making rowing in unison, making the whole thing work. And so finding the right people, it taking forever to find the right person, finding the right person and them not wanting to join, good people leaving, stuff like that, that tends to hit you pretty hard because it's personal.
Okay, so there's another question that's related to that, around culture. How did the culture team change as you scaled Stripe, and any lessons learned that you wish someone had told you in advance?
So there is this fascination in startup culture, which I object to, around preserving the culture. And I object to it because the implicit hubris in the, and I know this wasn't what the question was asking, but it's kind of my bugbear, the implicit hubris in assuming that you had the right culture in the beginning. We have very much tried to optimize for, there are certain things that we value at Stripe, but how those manifest will change over time. And I can point to several points during Stripe's history, during which the culture meaningfully improved because there was, a discipline that we weren't good at, that we started to become good at. There were things that we started emphasizing. In the early days, for example, you're just flying by night, you're making decisions based on gut because you don't have the metrics in place, and you kind of can't do things in a metrics-oriented way because you don't have any customers to have data on. We have shifted over time to become a much more metrics-oriented company, and that has been to our benefit.
How would you describe your culture?
So,
and I know you're saying it should constantly change and morph, but
no,
what is the essence of it?
Right, it's a good question what the invariants of the culture are. One, people are generally hardworking, care about their specific craft very well. We care a lot about people being rigorous in their thinking and execution, in that there is no blueprint for Stripe. We're kind of half a technology company, half a finance company, but we're building a developer-focused infrastructure platform. There's just often, there aren't other companies we can crib answers from, and so you end up inventing a lot of stuff from first principles, and we want people who are not just seeing what everyone else does and kind of blindly copying it. A lot of our best products have come from rethinking. It's like, whoa, stop. I mean, some people here will be familiar with Stripe Atlas, which is nothing to do with payments. It's an incorporation service, but actually, if you think about it, it makes perfect sense for Stripe, but it was not at all obvious to begin with. And then, honestly, people who are nice in that, well, no, seriously, Silicon Valley has often talks about having a no assholes rule at companies, and that's a really low bar. I mean, if that's what you're selecting for, it's like, come on. And so we're in this for the long term. You want people to be jumping out of bed in the morning, not just because the work is interesting and the mission is meaningful, even though it hopefully is, but also because they genuinely like all the people they're working alongside and they're good co-contributors. And so kind of to get back to any specific advice for culture on whoever asked that question, one is just the meta advice of always be seeking to up-level the culture rather than preserve. People get hung up on, we have this tradition, or, like very surface stuff, as opposed to saying, okay, how do we execute as a team, and kind of up-leveling that over time. And the second thing, for us at least, that's worked quite well is caring about having good people as people rather than just their skill set.
Brilliant. We're out of time. Thank you very much indeed. Fascinating.
Thank you.
Hello, my name's Tim. I'm the Startup Grind co-director of London.